Okay, before you continue watching this video, or before I continue telling you what this process is really all about and giving you this information, I'm going to pause and let you take a serious look at what you see on the screen. Yep. Now you see unlock the gift, and watch the videos that I'm going to be talking about in a few minutes. So directly under the gift, you see Money Funds My Lifestyle. Well, Money Funds My Lifestyle is going to take you to my shopping center. Yep, I own a shopping center, and Money Funds My Lifestyle for those persons who visit my shopping center and purchase things out of my shopping center. And I'm a global shopping center. I'm worldwide. You can shop in my shopping center. And matter of fact, I have partnerships with some of the world's largest shopping centers, like the shopping centers in Dubai, the world's largest shopping center in America, the world's largest shopping center in Japan, you see. So I have a conglomerate of shopping centers, and Money Funds My Lifestyle will take you directly to my shopping centers. And there are many different outlets to show you what you're going to do. Also, the video that you see on the screen. This is Unlock the Gift is a video, and I'm going to show you that 2 times just in case you miss it, because there is an IQ test in this process to see if your IQ is enough for you to understand what we are presenting in this process of giving you these 2 videos. So the Diamond Review lifestyle is 1 video, and it's going to be the same video as the second video we'll show, because we're going to show you 2 just in case you want to get a really great understanding and not fail this test. Well, it's really not a test, but we want you to know that what we're talking about. Those of you who I'm going to send this information to, you know me, so I've been now for perhaps doing your tax for the last 50 years, because I started this process in 1968, and I'm going to share that information with you on the end for those of you who do not know me. But those of you who do know me, I want you to make sure that you explain this to as many people as you possibly can in your immediate family, and also those persons that you run into. Explain to them what they are going to be up against under this new 2018 tax law. That's what we're really all about, and giving you this information is to tell you that you are going to pay tax in the 2018 tax law. The law has changed. Your itemized deductions has now been eliminated. Many of them been eliminated, and if you don't take the small standard deduction that's been given to many of you, it's going to be a tragic thing when you get that 2018 tax bill if you don't take something right now. We got less than 2 months for you to position yourself so that the 2018 law won't be so severe upon you in 2019, and it'll get better for you in 2020 because we're in it now. The law is already in effect now for over a year, and it's been very quietly creeping up on you. No one is saying anything about it since January the 1st of 2018, when the President of the United States signed it into law. But since then, it has gone through some changes that's going to affect you tremendously. Excuse me, it's gone through some changes that's going to affect you tremendously. So watch this video you see at the Diamond Review Lifestyle .com is a video, and it looks just like what you see on the screen, but Money Funds My Lifestyle is going to take you into my shopping center. Go to the shopping center first to get an idea of what we're talking about, because the shopping center that I show you, that's my shopping center, I'm going to show you how to get the same shopping center for as little as $20. One-time fee, as little as $20, one-time fee, and to maintain the shopping center for other people around the world to shop in your shopping center is going to cost you a big old whopping $10 a month. Yep, that's all we're talking about. Now, use your mind now. $20 to start the process to have your own shopping center, and $10 a month to maintain it so that people around the world by phone, iPhone, smartphone, computers, iPad, all over the world can shop on in your shopping center, and the shipping will be done by the companies that they're going to send the person to shop on. So let me go on now to show you the next one. The next thing you're going to see is a video. Now, the video that I just played for you is introducing you to the home-based business to see if you have the understanding that it just gave you. It asks you to make a decision, and decision either going to affect you with a yes or with a no. Regardless of what you do, your decision is going to be affected by you. If you say no, it's going to help you, and if you say yes, it's going to help you even more. But it's your decision that we're asking you to make, and it truly is an IQ test. Now, if you walk away from it, then we'll know the size of your IQ that you had, and only you can identify that. We won't know who you are, ever will see you, except many of those of you who know who I am. And I'm asking you to do not walk away from this because it's going to cost you too much to walk away. And I can just tell you that from what you see on the screen, the new 2018 tax law has changed your life with regards to the tax you're going to pay, whether there's Social Security tax, whether there's federal and state tax, all different taxes, your mortgage tax, all different tax, sales tax, all tax have changed. And I want you to take advantage of what you can through this process of what I'm introducing to you even right now. So let us go on with this. Now, I'm going to show you another video.
At Benefit Hub, we have completely reinvented how benefits are delivered to employees. That's why 5 of the top 10 largest employers in the U.S. and thousands of small family businesses are using Benefit Hub. Benefit Hub starts with an incredible platform preloaded with discounts and perks for items on brands your employees already love. You can stop there or turn on some of our other benefits. Simply pick the ones you want to use with just one click. We also give you a ton of tracking and reporting tools to ensure success of your customized plan. Employees start with instant access to thousands of exclusive discounts on everyday purchases. And if you've selected additional benefits, employees can access everything right through your Benefit Hub. So now they're benefiting every day. And with easy access to all your benefits, employees are engaged. And engaged employees are happy employees who increase profits and grow your business. Energize your team now. It takes just 2 minutes to set up your Benefit Hub, and it's free. Benefit Hub. Reward, engage, energize. It's what we do for millions of employees.
Okay, now I'm going right back to the travel and lifestyle advocate process for you to understand what I'm really making this presentation about, for you to become a lifestyle advocate. And I notice I said lifestyle, I skipped the word travel because your life is more important than any travel that you're going to take wherever you're going to go. That's a form of entertainment for you to travel or to go from point A to point B for whatever reason you're doing it. But what I'm talking about is your lifestyle, and your income tax is a part of your lifestyle. You have to pay tax regardless. The two things that we all got to do, that's to die and to pay tax. That's just that simple for those of an American, outside of America as well. We all have to pay tax. And what I want you to do now is to using your own lifestyle as get an understanding of the 2018 tax law. Let's use your personal lifestyle for you to get an understanding as to why you want to take advantage of the opportunity that I'm presenting you. $20 one-time fee, $10 a month. $20 one-time fee, $10 a month, and your situation will change with regard to your income tax. I hope that you can understand what I'm saying. I'm going to keep saying it because that's all I'm talking about. Now, here's how will you let persons know about your lifestyle. Well, here I'm telling you to watch my good lifestyle video. You see, those persons here are putting out information. This is yep, this is exactly as you see it on TV. These persons here are in a newsroom, and these are news reporters getting information to put out all over the entire world. These persons here are taking in information from one individual, and those different persons that you see in the room are putting out information that this one person is giving all over the entire world. That is amazing. So what you're going to do is use the same process. You're going to take the gift and you're going to put your information on your gift out in the entire world. There's no different in the comparison here. It's just that you have to use the mindset that the person is using in this situation here, using your mindset to dispense information. You may not know but one person, that one person may know two. and those two people made no 10. You see, the process has to start at one person, and that happened to be you because you are the one that's going to be paying the tax if you don't do anything different than what you're doing now. So watch my lifestyle video. It's all real. I'm not making up anything. I'm telling you nothing but 100% God's truth. Watch my good life video, and it's going to give you some insights as to what and why I'm spending so much time trying to get this point over to you.
So what's in the final version of the new tax law? Here are some changes coming to your personal finances you need to know. If you're a big earner, you got lucky. The top tax rate for individuals will now be 37%. That's down from the current rate of 39.6%. There are also 6 other brackets, which will likely bring your tax rate down. More on that in a minute. Also in the bill, the current standard deduction is nearly doubled. That's the amount you can deduct from your income right off the bat each year. For individuals, to $12,000. For couples, to $24,000. But for those who itemize their deductions, instead, you can still deduct state and local taxes, but only up to $10,000. So that means next year, you may not be able to deduct as much as you can this year, thanks to the new $10,000 cap. Now, mortgage interest. You'll still be able to deduct it, but on the first $750,000 of new loans. That's down from the current cap of $1 million. Republicans also agreed to keep the alternative minimum tax for individuals, but increase the income level where it kicks in, and to keep the estate tax, but increase the threshold for that. The vast majority of families will see a tax cut, at least initially. In the first year, a family making $100,000 a year taking the standard deduction would likely see a savings between $2,000 and $4,000 on their taxes. That same family, though, in a high-tax state who itemizes deductions would only see savings of around $1,000. Either way, those benefits scale back and then disappear completely by 2026, because that's when all the personal cuts expire under this bill. Now, the most controversial provisions. Republicans reportedly agreed to go along with the Senate version of the tax plan and repeal Obamacare's individual mandate. And the Congressional Budget Office estimates that could lead to 13 million more people becoming uninsured than under current law.
Hey, NBC News viewers, thanks for checking out our YouTube channel. Subscribe by clicking on that button down here and click on any of the videos over here to watch the latest interviews, show highlights, and digital exclusives. Thanks for watching.
Another video. Now, after that video, I'm bringing you to this 2018 situation. You notice you see 2017 where the federal government have not put out the 2018 forms that you need to put in to make a decision. Your itemized deductions. Your itemized deductions have changed. You notice I'm saying if you have $8,000 in income tax withheld out of your salary, if you paid $500 in real estate tax, if you had personal tax of $355, or if you had general sales tax of $3,000, or whatever you bought, a car, a plane, or whatever you bought, then your limit is $10,000. But you notice how many tax dollars you spent to 8, that's 15, and that's $18,000. Well, you're only limited to 10,000. So your itemized deduction just lost you, yep, 8,000. 8,000. Your limit to your itemized deduction is 20,000. That's what we're actually really talking about, because after your mortgage interest, 10,000 limited amount, and your real estate tax, limited amount, is going to give you only a $20,000 deduction. But if you're a single person, it's 12. Your standard deduction is 12,000. If you're a married person, your standard deduction is 24,000. So chances are you would take the standard deduction. That's what everyone in the tax arena is looking for you to do is take the standard deductions, because if you take the standard deduction, then the house win. But if you use your itemized deduction, if you were able to use them, then you would have more for yourself. Well, let's go on and look at some of the other deductions. Now, looking down this Schedule A, and we're using 2017 because the 2018 is not yet out. I pull this information directly from the Internal Revenue's website. The 2018 limitation, though, on your gifts is not there. I'm using a 10% of your uh, uh, adjusted gross income. If your adjusted gross income was 105, $555, then I'm using a 10% of that 100,000 to give you to the 10 contributions, okay? And your the non-cash items, a car or whatever you want to give away, you can take the deductions of your standard deduction or your itemized deduction of the contributions for itemized deductions. And if you take the itemized deduction, you won't be able to take the standard deduction. But if you gave away $11,000 in contributions or charitable contribution, and you only have standard deductions, so you would take the standard deduction as a single person because you'd have 12,000 versus 11,000 that you gave away. You notice down at the bottom under the miscellaneous deductions, there's nothing under your your other deductions. There's nothing because that's been completely eliminated from you. You have nothing left except your $10,000 on your standard deduction or $10,000 on your mortgage or your standard deduction. So I'm recommending that you would take the standard deduction. But there's an alternative for you. And your alternative would be for you to take, just look at this now. I've broken it down for you. Let's say you just take up the business of a $20 business and you went ahead and do it. Now, here's a new 2018 tax law that eliminated certain itemized deductions. Well, I showed you pretty much what has been eliminated. This is based on a married couple as opposed to an individual, but they're 24, you see in the blue, will become 12 for an individual. So they will allow you 12,000 and 24,000 for a person that don't have a business. But now this is an opportunity for you to show you what your business would look like if you had a business and you had the deductions that I'm going to show you in the next tax form. On the left side of the screen, we show you what has been eliminated by the government, but yet and still it's also showing you what you can do with a business. So all of this data that you see here is to show you what you can do and also to show you what will happen if you do not do anything at all. So if you do something, then your itemized deduction would be limited to 10,000 or 24,000 if you're a married couple. So naturally you would take the 24,000 versus the 20,000. I'm talking about the mortgage interest and the tax that you would have. 10,000 limitation on the tax, 10,000 limitation on the mortgage. So you take the 24,000 versus the 20,000. If you don't have a business, you're going to take the 20,000 or you're going to take the 24,000. If you don't have a business, you're going to take the 24,000 standard deduction, or you're going to take married couple, you're going to take the $20,000 standard deduction plus your contribution that you give away. That's it. You get nothing else. The medical I'm not even talking about because you have to get over on the portion of 7.5% of your adjusted gross income. In this case here, 7.5% of your adjusted income would be around $8,000. So you would have to be almost dead if you got insurance, and it's going to cover your medical, and therefore your medical is going to be less than $8,000. So you would not be able to qualify for the medical. So you would end up taking the $24,000. But if you had a business and you had a business loss and your anticipated business loss would cover anything that you have lost, because you'll be losing the $17,000 in the itemized deductions at the tax and the interest that you see, the mortgage interest. You would have $26,000 that you're going to lose in savings for your mortgage interest. You're also going to lose the $18,955. So hold this slide open so you can understand what I'm telling you is that if you add up all the tax, the $8,000, the $7,580, the $355, and the $3,020, that's $18,900. But your limit is $10,000 now. So you lose that 8,000. Down on the mortgage, your mortgage interest will be 26,402. But again, it's limited to 10,000. So then you would lose the difference between the 16,402. You see what I'm saying? So add the 16,000 plus the 18,000. That's your total loss if you don't have a business. If you have a business, your business loss, well, you're going to show it in a few minutes, will be $23,508. That $23,508 would replace a portion of what you lost with the itemized deduction, because you're going to be forced to take the standard deduction because your limit to your tax is 10,000. The limit to your mortgage interest is 10,000. You see, that's just 20,000. So you would end up taking the standard deduction. The standard deduction without a business is not going to help you at all. It's going to increase your liability. The old saying is someone's going to pay, and the ones that are going to pay are persons who do not have a business. Do not have a business. So that's why it's so important for you to have a business in order for you not to be taken advantage of. You're going to be taken advantage of, or you already have been taken advantage of. And this is just for you to stop the bleeding on what I know that's going to happen and what I've been doing now for over 50 years, to show you how and why you would not want to continue going down the road you're going. Now, look, watch this. This is the Schedule C that you would fill out if you had a business. And you notice I said United States of America, income taxpayer, that's you. All the numbers that you see at the top, the Social Security number, all these numbers are just numbers to show you what you'd have to have, regardless of who you are. I'm using the name of George and Mary Richardson, and my last name is Richardson. I don't know anybody in my family named George or Mary, but now also it's giving you all information just to show you what you'd have to fill out on your form Schedule C if you had a business. And notice up there, and I'm going to give you a video to show you why you want to be a sole proprietor in the first part of this process as opposed to being anything else, because what I'm recommending you to be is a service. You're going to be a service business, and your service is to give something away. That is going to be your business, is to give the gift away. And once you give the gift away, charge you $20 to start just giving a gift away, and it costs you $10 a month to maintain the worldwide shopping center in order for you to have the business that I'm talking about. And then when you we're going to talk about that later when we get further down on this Schedule C. Notice the income from this would be $11,500. That would be your gross income that would be produced by your Schedule C, on your Schedule C, from your business operations as a sole proprietor. You notice that? Now let's go further on the Schedule C. This is the part 2 of the Schedule C, which is expenses, showing you your advertising, showing you if you have contract labor, someone to cut your lawn, or do whatever they would do for you, your depreciation on your equipment like your computer, things like that. Your insurance that you'd pay, then if you have any legal fees or professional fees for your accounting services, or the software and things that you buy to maintain your business, your office expenses, all different. If you're renting a car, if you had business properties that you maintain for your business, supplies, tax, travel, if you decide you want to go outside of to tell people about your business, utilities. These are expenses, so your total expenses would be $35,008. You see down there on line 28, your total expenses for operating your business, but your income is only 11,000. So therefore, you would lose money. Now, the Internal Revenue says it's going to take you 3 to 5 years in order for you to start making money when you start your business. So if you started your business for $20 in 2018, it'd be sometimes in 2020, according to the Internal Revenue, before you produce a profit. So this is just an example. If you were to make $11,000 and you have expenses of total expenses of 35,000, your loss would be 23,000. That 23,000 would be going to help you, as you saw back up earlier. The 23,000 will be helping you to add to the other monies that you've already lost. You lost 18,000 on the taxes, you lost 26,000 on the mortgage interest, and that's going to help replace the business, help replace what you've lost. So what I'm showing you is to show you why you need to make a decision through those videos I showed you. You need to make a decision about not having the liability that you're going to have. You cannot afford not to do this, because if you want to have a huge liability, then don't do this. If you do not want to have a huge tax liability, then you want to show and take me up on this offer that I'm trying to show you. Okay. Now we're at slide 11, and I'm sorry, slide 12, which is the Schedule C part of this process. But now I'm going to show you a video. The next video that that I'm showing you is a video to show you what kind of expenses that you're going to incur. Now, this is from well, not an associate, but someone in the same profession with the same background that I have to show you this. And I'm using his video to show you what you need to do and to get a witness for myself. I'm telling you this myself, but I have a witness who does this just like I do to show you what you need to do. Spend $20 one time. Don't have to spend it anymore, but you do have to spend $10 a month. Now, you know what $10 a month would be. That's an operating expense for your business. $10 a month is an operating expense for your business. That's taxes. That's a business expense. So you're going to write that off plus all the other expenses that you're going to incur the year from operating a business. So that's why you will want to use a business in this process. And I hope you can just take a few minutes and understand what I'm talking about. So watch this over and over again. I tell you what, if you don't, if you're going to decide that this is not something for you, before you completely throw the idea out, process out, share it with two people and see if those two people will be able to show you what you are not seeing. And it's also possible that you can show it to two people, and those two people may not even see what you're seeing. I don't know. I'm just making a recommendation as to what can take place if you decide that you're not going to do it. Now, watch this video, and then I'm going to conclude this because that will be the end. We'll have 14 slides, and the next slide is the 13th slide, which is a video. And then final slide, I'm going to tell you about myself. Okay, now this is me. My name is David Richardson. I'm the class of 1967 from the University of Arkansas at Pine Bluff. I am a graduate of the University of Arkansas. I graduated with an accounting degree and a business administration degree when I graduated in 1967. 1968, I started running my own income tax services, and I've been running my own income tax services since 1968. And we're now in 2018. Now, sure, you can see my picture and say I'm on about 16 or 17 years old, but from 2000, from 1968 to 2018 was 50 years since I've been doing this business. Okay, so what I'm recommending you to do is listen to what I'm saying because I don't know who else you would listen to, but you may be someone you have 51 years that you listen to, but I'm suggesting that for doing the past 50 years, I've been trying to help as many people as possible, and that also includes you, even right now. Money, my money is on my plan B. That's one of the websites that I didn't talk about. I gave you Money Funds My Lifestyle. That's going to take you to my shopping center, and just like you're going to have your own shopping center, and you're going to have your own name on your own shopping center. But my cashback bank is what I get the money from. The $11,000 that I showed you a few minutes ago, that money comes from my cashback bank. So as a person shopping my shopping center and they get cash back and savings on what they shop, I get a percentage of the money that they save. And that goes into my cashback bank. And at the end of the year, I get a 1099 that showed I made $11,500, and I write off the expenses against my $11,500. And in this case, the expenses was was 36,000, but my net out of the whole process was I had a loss of $23,588. So all I'm suggesting to you to get an understanding of what I'm talking about is for you to have your own cashback bank. What would it cost you to have your own cashback bank? $20, one-time fee. How much would it cost you a month to have your own cashback bank? $10. Is that a business? And that is a bona fide business that you running from your iPhone, running from your smartphone. You really don't need a computer to do what I'm recommending. But if you did have, that's even the better. But because a computer is a business expense, where your iPhone also is a business expense, your smartphone is a business expense, your travel going from point A to point B to tell other persons about your business is a business expense. So you see, you need a business other than just the standard deduction. I'm going to conclude this. I've been with you now too long, almost 25 minutes. I'm going to conclude. I thank you, and my name is David Richardson. You be blessed. $20 out of pocket one time.